Hey everyone, this is a market update for Saturday, May 8th, 2010. And today's update, I want to really focus on the broader indices as a whole rather than individual stocks. First, I want to take a look at the S&P 500. Obviously, this week was huge. We had the crash on Thursday, and again, Friday was a continuation of that. Again, this week, 4 out of the 5 days were down, and in those 4 days, we lost just about 6%, even though Monday was an up day. Again, on the larger time frame, this is not a bullish looking chart. I find it very hard to remain bullish after looking at this chart. Obviously, the charts are rolling over, and I mean, it's a straight line down this week, and I just don't see how we can bounce from here all the way back to our highs and imagine that this never happened. I mean, you don't lose 1,000 points on a Dow and just move on after that. So again, there could be an actual fundamental shift happening here. I think as you know, the overall counts count for this down move to be a primary wave 1, this rally to be a primary wave 2, and this could very much be the start of the next leg of the bear market. But again, that's a long time away. We want to focus on the smaller time frame, but even that smaller time frame, this is not bullish. I think we could get a continuation. Technically, a lot of damage was done this week. We basically erased 3 months in a matter of 2 days. So again, that's really bearish. We do have this trend line here right around 1061 is lying as for tomorrow or for Monday. If we do break this, I think there's a really good opportunity that we may come down to 976, 980, or even 950, worst come worst, in the next couple of weeks if this trend line does break. Again, as I mentioned, there could be a fundamental shift occurring that we could be entering another bear phase, and the reason I say that is because it's just not the U.S. markets that have had a down week or a down month. It's the world markets that are also selling off, and the world markets have sold off much more harder than we have. We actually have some catching up to do, and this week the Japanese Nikkei was closed two days, and I think they were still down more than we were. So we have a lot of catching up to do. First thing I wanted to look at was the London FTSE. This is obviously the London Stock Exchange, or their index there in England. They are almost at their February lows. Our February lows were at 1044 on the S&P, so I mean, we're still, I think this week we closed at 1110, so we are still about 50-60 S&P points away from there. So again, London, they've been selling off much harder than we have. They were down 2.6% on Friday, and we were down about 1.5%. So again, they were down more than 1% more than us. And then I want to take a look at France. France has taken out its November lows and its February lows. They are right around where they were in August. Again, taking that to the S&P, in August, right around here, we were at 1029 was our high right around here. So again, just under that 1044 low. So obviously France has sold off harder than England, and England has sold off harder than us. And the worst of all, I don't even know if it's worth looking at, but is obviously Greece. Obviously, they're the one that is really causing all this, or they're the ones getting the blame. They're almost at their March lows. Obviously, we're nowhere near that, but just to put into perspective how the world markets are reacting, and as opposed to where we are, we have a lot of catching up to do. Also, the same thing with the Japanese Nikkei. They have taken out their February lows, and they're on their way to their November lows, looks like it. They had a different pattern here in late 09, but again, they have taken out their February lows. So I do think that in the coming weeks we may take out this 1044 low, and that breaking that pivot will be, I think, very bearish. Basically from here we may have a stop at 1017, 1018, but really there's nothing in our way to almost 950 on the daily charts. Again, on the smaller time frame for this week, like I said on Friday, we could be in this triangle for minute wave 4. Obviously, from a high here at 1220, we have had 1, 2, and obviously this crash. I think I don't see any other way than to label this as a wave 3. The strength and the power of the move down was really a typical wave 3. The internals, I think, at one point were 55-1 to the downside. So I mean, that's very powerful. Much more powerful than what we've seen a couple days before that. We had 15-1, 20-1 down. But I mean, seeing during the sell-off 55-1, I mean, that's a crash. Then we had this bounce. We almost retraced 50%, believe it or not, but A, B, C, D, and we could have a slightly higher open on Monday to finish this E wave, which it could complete minute wave 4, and then we could get one more down move for minute wave 5. Now, with wave 3 being so long and powerful, I think there's a good chance that wave 5 may end up truncating. It may either retest the lows at 1065 or make low maybe 1080, 1070. We'll have to see, but I think 1065 may hold just because wave 3 was so powerful. I find it hard that wave 5 will be another, powerful strong down move. We could make a new low, get it to 1050 or 1044, but again, I think that the chance of that occurring is minimal just because of the strength of the wave 3. But again, the market is showing strength to the downside. If sellers do continue to sell, they could push this thing much lower. So again, we'll have to see how that plays out. I want to also look at the currency, the euro. Obviously, the euro is ahead. It's basically moving with Greece. Again, Greece, small country. No one really talks about it as being a powerhouse. When you talk about Europe, it's always Germany, France, England, but no one really talks about Greece. But if you look at the chart of the euro and then you look at the chart of the London FTSE, they're not the same. But then if you look at this chart right here, euro, and then you switch to the Greece markets, I mean, it's essentially the same in the past year and a half. Greece is almost at its March lows, and the euro is almost at its March lows. So the euro has basically been moving with Greece, despite Greece being relatively small compared to France or Germany or England, for that matter. Again, the euro, like I said, March lows, a couple ticks away from there. I think the euro could be forming a head and shoulders pattern here, actually. This move here in late 08, early 09 could be a right shoulder right here. We have had, for the past almost year, we've been forming this head. And again, I think the euro is due for a bounce. It's had a really huge down move for a currency. This is a very big move. We have 1, 2, 3, 4, and 5 waves down. This could complete a wave 1 of some sort, whether it be, I think an intermediate wave 1 would be the right degree. We could get a wave 2 bounce. Wave 2 typically, again, 50 to 61.8% retracement. So you're looking right back to 138 or 141. That could actually form a right shoulder. And then if these problems do continue in Europe, whether Spain is the next country to go, or Portugal, or Italy, or Belgium, or whoever else is in trouble there, I think the euro could be in for a big collapse coming in the next year or so. So we'll have to see how this head and shoulders plays out. But again, that's a very bearish looking chart. And inverse to the euro, obviously, is the US dollar. And the dollar has been strengthened. You can see this is a very strong and powerful up move from its November lows. Again, complete opposite. Instead of 5 waves down, we have 1, 2, 3, 4, and 5 waves up. On the daily charts, we have some resistance coming up at 86.27. That's still about $2 almost from where we are right now. Again, in between 86.25 and 87.25, basically, there is not much resistance on the daily charts. We could, if we break one pivot, it's most likely we're going to the next pivot. This is actually the April highs for the dollar. The March highs for the dollar is right around 90. So the euro is much closer to its March lows than the dollar is to its March lows. So again, we'll have to see. I mean, there's the bears are taking control again. Like I said, looking at this daily chart, it's very hard to be bullish. And there's a lot of problems now going on. There's a lot of fear and panic that the Greece debt may, spread throughout, or the U.S. loaning money to the IMF and Greece not being able to pay back or whatever. But again, the bears definitely have the news out there to push it lower. They've done the technical damage to push it lower. So again, we may get a bounce. Obviously, we are very oversold. I mean, selling off 6% in a mere 4 days is, again, oversold conditions. We may get a bounce back to 1150, maybe 1160, but I think overall we may be entering a new downtrend. Again, like I said, in the smaller time frame, watch for perhaps maybe a little higher open come Monday. We may get to 1120, I think, 1119 to complete the E wave before coming back down, possibly testing these lows or even making higher lows right around maybe 1080. From back a few months ago, 1081 is a very strong pivot. That was actually our highs right here in September. Late September, we made our highs at 1081. So it's a key pivot there that's been tested a few times in the past couple months. So again, we'll have to see. Let's hope for the best this week, and good luck. Thank you.